Thursday, March 25th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at how inflation is going to wipe out many people, especially the middle class, the lower classes, the people who are struggling to survive, and how it's all a matter of semantics, how the powers that be, the central bankers, even the economists who are supposed to be a bit more intelligent are going to fool all of us. There's an old quote, and I think it was Keynes who made that quote in the introduction to one of his major books, I think the General Theory book. And he attributes this quote to Lenin. Some people argued that Lenin never said that, but even if he didn't, it's a really good quote. It says that inflation wipes out the bourgeoisie, which is the middle class, and that only one man in a million realizes, or woman, that it's happening. And why is that? Well, because governments, that's what they do best. They extract wealth from the public. They take us to wars. They create crises in order to stay in power. They divide us through politics and other things. And that's why you need to, how can I say, try to switch off from the distractions, know the definition of things, and not be fooled by government and their statistics about what they call inflation. So to explain inflation to you, I'm going to look at a couple of quotes and some definitions that I've done many times in the past. For my old viewers, this is like a repetition, but I'm getting a lot of viewers. And even for the old viewers, you need to keep this in mind, because in the press, in the mainstream media, you're going to get bombarded with misinformation. So there's Felix Sommeray, who was a banker, who was known as the Raven of Zurich. He always said that inflation is purely a monetary phenomenon, and that without government you can't have inflation. So that's a really important quote, I think, and I'm gonna come to my own explanation of how I would explain inflation. But before that, I'm gonna look at another summary quote. He also said, inflation, on the other hand, can go on for years without its victims becoming conscious of the incredible way in which they have been swindled. And now to the definitions. The first one is from the Merriam-Webster dictionary from the 1970s, which I still have. It says, an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. So it could be anything going up in price. So rising prices are the consequence of inflation. But nowadays they've made us believe that rising prices is the inflation, and they put it into baskets called CPI or PCE, and they tinker it. They measure everything that doesn't go up. They adjust it for hedonics, substitution. What's substitution? Well, let's say the price of fillet steak goes up too much. They'll replace that with a lower quality beef, right? That's what they do. They don't include the price of housing. They don't include rent and many other things that affect the cost of living. So that was in the 1970s. From the Merriam-Webster dictionary, and this one here is from the Oxford English Dictionary from 1925. And I have to thank one of my viewers for sending me this, because I don't have a 1925 edition of the Oxford Dictionary. It says, inflate, abnormally increase state's currency, especially by issue of inconvertible paper. So there you go, paper backed by nothing. For my explanation, let's go back into a society or an economy that is still very, how can I say, not very well developed and hasn't evolved, and people still barter for things. So let's say I'm a farmer, I have cows, I produce cheese, and then I need shoes, and John produces shoes. So, and luckily he wants cheese and I need shoes. So we exchange those two products that have value, actual value. The cheese, John can eat the cheese, and I need the shoes. Let's say civilization, so to speak, comes into our village and says, oh, we've got this currency now, you're going to have to use this, you can't barter anymore, and you're going to have 100 of these, everyone's going to have 100, right? And then you find that a year later, this currency is all around, and people are being forced to use this, but you can't get as much cheese or shoes because people realize there's just too many of these around. They don't really have any value. So that's inflation, and that's what we have. And that's why it's so dishonest, in my opinion. Some of the stories and headlines that we see, for example, here in the UK yesterday, we were told that the inflation, they call it inflation, even though it's the basket of goods that from which they measure prices, right? They said the ONS, Office of National Statistics, said annual consumer price inflation. It's not consumer price inflation, it's just consumer prices. Inflation, as I said, is purely a monetary phenomenon. So it says that inflation, so they use consumer price inflation, slowed to 0.4% in February from 0.7% the previous month. An unexpected drop due largely to an unseasonal fall in prices for clothes, secondhand cars, and toys. So now it's clothes, secondhand cars, and toys that actually create or lower inflation. So this is from the FT, Financial Times, supposed to be a top finance, economics newspaper. So it's quite amazing, and people never learn. So what about the cost of living? That's what's going up, right? They don't talk about the fact that our utility bills are going up. They don't talk about UK house price growth, right? Look at what it's done in the last 12 months. It's gone up by 8%. You see, that's the consequence of inflation. That's rising prices, and they're telling us there's no inflation. They don't talk about the local taxes going up by at least 3%. Here in London, we have a tax that we pay for the Greater London Council, which is the mayor of London. That's gone up by 9.5%. They don't talk about the price of transportation going up. They don't talk about the price of food. They don't talk about shrinkflation, packages shrinking even more, and the prices sometimes even going up and staying the same. I like buying this, it's like a box of meatballs. It's probably not great for me, but it used to have about 12 meatballs in there for £1, which was pretty good value. But now I notice they've cut it in half, but the price is still £1. So what else? There are other headlines here, and this is all from the mainstream media. UK inflation falls to 0.4% in February. And that's not month on month, that's year on year. Do you really believe that prices are going up by 0.4%? So The Guardian says UK inflation slow as UK and Eurozone businesses return to growth in March. BBC, UK inflation rate falls as clothes prices drop. So you see, they're trying to tell you that government has got nothing to do with inflation, right? It's people who sell clothes. Yahoo Finance, UK inflation unexpectedly falls as clothes shops slash prices. So, I mean, it's pretty amazing that people never learn. I remember back in the 90s when I worked in the markets, that Germany, for some reason, called the CPI the cost of living data. And they were right. And why is that? Well, because the Germans, the Bundesbank, German economists, up until recently, unfortunately, they have had to join the bandwagon and change what they used to call the cost of living data to CPI. And why is that? Well, because the Germans have had two currency collapses in the last 100 years. We had the Weimar hyperinflation in 1923, and we had the post-World War II collapse of the currency, 1945, mid-40s to late 40s. So they know what inflation is and what causes. They know that it's the printing of money by government and banks out of thin air. And I remember very well that the German Bundesbank, the German central bank, they used to target M3. That was the most important statistic that used to come out for the German government bond market. And I remember very well they had a target of around maybe 2 to 4%. If M3 went up above that level, you could bet that the bond market would be under pressure and yields would rise. And I remember in 1994, there was a German M3 data that came out, and there was a lot of speculation that it might be uncomfortably high for the Bundesbank and that they'd have to raise interest rates. And it came out at 30% year on year. And I remember the German government bond future, the 10-year future, the Bund, dropped to like almost 90, or I think it dropped from like 97 to 93 in one day. And nowadays, of course, it's over 160, that price. And it was probably the busiest day I had in my career as a futures broker. At that time, we still used to pass our orders to the floor of the exchange. I used to work in the office, and it was a day I'll never forget, a day where I had sometimes 2, sometimes 3 phones talking to different clients. And luckily, there was an order that I gave, and I wasn't sure if the guy who put the order to the exchange got it. So I gave it again. And the next day, we found out that they executed that twice. And fortunately, we made money on that trade. I think we made like 50,000 marks. But I could have lost my job. So it was a really hectic day. So the Germans, unfortunately, I don't know what year they changed the name of that statistic from cost of living to CPI. So I'm sure the younger Germans are being fooled like we've been fooled here in the UK and in the US. We hear from Jay Powell that inflation is going to be only temporary, or what he calls inflation, of course, is the CPI or the PCE, and that things will go back to normal. And don't believe him. Your cost of living is going to continue to increase. What this is going to do, what governments do with these indices that they produce, is they use that to basically rip off pensioners, rip off public sector workers, rip off many people that depend on the government for their livelihood. Because I think it's in April that they take the CPI here in the UK, and they use that to index the increase in the public pension, the increase in public sector workers' wages. So if it's almost near zero, you're going to have very little or no increase in your wages, while the cost of living has gone up. So that's how they confiscate your wealth, not only wealth, but your efforts. Because a lot of people, unfortunately, that are not wealthy, that are just starting out, young people or people who are at the bottom of the ladder, economic ladder, their wages also are not going to cover the cost of living. Is it any wonder that there are so many people hard up these days? If prices were really under control, or we didn't really have inflation, things would be great. I mean, supposedly now we have a great economy, only 5% unemployment, we've got almost no inflation, and growth is great, even though most of the economy has been in lockdown most of the last 12 months. It's really amazing. So for all those out there that say that we have a deflation problem, please do your homework. Look at the semantics. You're doing people a disservice by telling them that there is no inflation. And I recommend this book here for those of you who want to learn more about what inflation is, what has government done to our money, by Murray Rothbard. He goes through the regression theory. And what does that mean? Well, he goes back in time to see how money and currency came about. And he goes through the barter, the indirect exchange, and you'll understand what inflation is, in my opinion, by reading this book. I'm going to put a free PDF file for it in the description. You can also buy it as well if you'd like, a hard copy. I've had this book for years. It's one of the best books, I think, that helps you understand money, inflation, and everything else, and how only government can create inflation. You might say, well, what about, it's commercial banks that issue the loans that create money? Yes, that's true, but it's the government that gives the power, monopoly power, to the central bank that controls the commercial banks. Yes, so without government instituting legal tender laws and prohibiting people from using whatever they want to use as money, they're able to control the money supply and inflate the money supply and basically confiscate your wealth. And that's what they're doing right now. So how do you protect yourself? Well, it's very hard, especially if you're just starting out, if you're on a fixed income, if you're a pensioner. But if you're doing well and you are being able to save extra fiat currency, this inflation currency, you need to change it to something else, because in the long term it's going to be worth less and less, and eventually you go to zero. So precious metals is always what I tell people I'm trying to accumulate to protect myself. And it's done great for me in the last 20 years. So gold and silver. And it's up to you to decide what you want to, how can I say, put your savings into. What about for people who can't afford to do what I've done? Well, just be aware that that's what they're doing. Be aware that you cannot be dependent on governments for your livelihood or for your pension in the future. Maybe try to build your own private pension on the side, whatever that may be. Don't think that the national pension, the public pension here in the UK, is gonna provide you a decent living, because it won't. It's gonna be diluted greatly by the inflation. So with that, let's quickly look at where the markets are. It's just before 8 a.m. London time. So we've got spot gold at 17.33. It's down just over $1. Range has been 17.40 to 17.30. So yes, precious metals. The most important thing for precious metals right now, and John Adams said that in his interview with me, is not to worry about the fiat price. You need to think long term, because what the powers that be do as well, they want you to stay in this inflation game so they can rip you off, right? And if you go into gold and silver, you're not playing their game anymore. So they do the most they can to discourage people from protecting themselves financially. And that's why it's so frustrating for precious metals investors. After almost 20 years of having saved in precious metals, yes, I know how frustrating it is, but in the long term, it will be very rewarding, in my opinion, has been. So silver is trading around 25, down about 10 cents. So still stuck here. But of course, if you try to get silver from many places, you won't be able to. Some people are waiting weeks or months for real silver. The Dow futures up 63, S&P is up 6, NASDAQ 100 futures up 20. The currencies are a little more stable this morning. Sterling is unchanged, virtually 136.77. The euro is at 118.06. The dollar is up slightly versus the yen, up 0.33% at 109.07. And the dollar is up 0.1% versus the yuan at 653.52. I saw crude went up yesterday a bit. There's this huge container ship that ran aground in the Suez Canal. That could disrupt the supply chain. We need to keep an eye on that. That could make things even worse for the world economy. We'll have to see if they're able to move that container ship. It's a huge container ship. Apparently, it's as long as the Empire State Building is tall. So it's blocking traffic there. I think 50 ships go through the Suez Canal every day, and it could affect things going forward. Yeah, WTI crude right now is down 1.3%, just above 60. High-grade copper is down almost 2%, right around $4. So that's come off a little bit. Bond market, the 10-year yield is at 162. So pretty much unchanged. It drifted off yesterday below 160. And there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.